Welcome to the B.F. Anderson Technical Report for December the 17th. I thought this was an interesting article that came out in Bloomberg, and it's discussing how the first all-electric auto service station will be open in Great Britain on Monday as drivers increasingly avoid cars fueled by gasoline and diesel. Now, what I understand is that Great Britain is going to build out about 100 of these stations. They're all solar-powered. They're solar powered, and then if you notice in the pictures to the right, you've got battery packs. Those battery packs will allow for charging of 24,000 miles. So you have the solar charging the battery packs run the charging stations. I'll tell you a quick story about this. My wife and I were in Tacoma, Washington, visiting our daughter. And I was doing research. This was 2012. And I was doing research on Tesla and had an analyst call me and say, pay attention to this company. Looks interesting. It was about a $5 billion company at the time. Right now it's approaching $600 billion. I was on the radio station recently and I was asked what was one of the biggest developments that we've seen over in the last couple of years. And I really feel that the development of the electric car has been really a very big deal, a very major achievement. So back to my story. Karen and I were in Tacoma, Washington, and I told her, I said, look, I need to go up to Bellevue, Washington, because Tesla has what they had called a gallery. Now, a gallery was nothing more than a shopping mall where you went to the parking lot of the shopping mall, and they had Tesla automobiles down there for you to test drive. So I had an appointment with a guy named Tom Hutchinson. In fact, we've stayed friends ever since. Really nice guy. He's turned out to be an executive with Tesla at this point. Anyway, Karen and I got in the car to do a test drive. And, on our way up there, Karen said to me, she said, now, Andy, we're just going to look at this car for research purposes, right? And I said, that's right. I said, I just want to make sure that I'm not investing in a golf cart. Well, we get to Bellevue and we meet up with Tom and we get in the car and I said, okay, Karen, you drive. So we get on the interstate and we're driving for about 10 miles and Karen looks over at me and says, Andy, we got to get this thing. So we did. We bought our first Tesla back in 2012. Very interesting technology. Now we're going to talk a little bit about technical analysis on the energy industry because there is a lot of disruption going on there. But until then, let's go ahead and look at what's going on with the market. NASDAQ looks constructive, new high, above the moving averages, looks good. The weekly graph, where we've got the 35-week moving average in an uptrend, index making a new high. This is a bull market. Now, on the indicator that we developed last week, this is the net new highs that we're seeing. Now, this is the actual New York Composite Index. This is the net new highs in histogram form. You can see here making very good progress. In fact, actually hitting a new high here on the 10-day moving average for this particular indicator. So new highs are outnumbering new lows. And as you can see here with the new lows, hardly anything to notice. We really don't even start noticing new lows until we get above 40 a day. Haven't seen that in a while. Now on the 1020, now this is a graph that we use for long-term trends. Use a monthly chart for that, and it's a monthly chart. It's longer than a daily chart or a weekly chart. So we see long-term trends, and we use moving averages as a way to measure this, and we look for golden crosses. We're on a golden cross here. We're on a golden cross with the NASDAQ. You can clearly see the new high. Golden cross looks very constructive. This is China. China trying to make a new high, just about making a new high, definitely on a golden cross. China's important because it really is the most prolific economy in the world other than the United States. Now, here we have the aggression index. Now, this is the daily read. You can see here new high on the aggression index. On the aggression index indicator, which means simply that the ratio needs to stay above the 40-week moving average. This is a weekly read, and you can see on a weekly basis the aggression index is hitting a new high. Very positive. Now, here are the three economic indicators we look at. You can see here interest rates continue to stay flat, looking for a possible breakout above 1%. Oil prices really are starting to improve a little bit. Now, we're going to talk a little bit about oil and energy here in a little bit, but it is interesting to me that the price of oil is back up to $47 a barrel for West Texas Intermediate. On the financial stocks, they've kind of flattened out a little bit, just like interest rates, but looking better. Now, on the S&P 500 using the 25 and 50 day, just like the NASDAQ, we're seeing a positive move here. Not quite a new high, but close. The S&P is also above the 200-day moving average, looking very positive. 200-day is important. Now, this is the one troubling indicator that we have. Now, this is just something to be aware of. The problem with sentiment, now what we're measuring here is fear and greed. And the greed is off the charts. I mean, I can't remember a time where we got readings this greedy. Now, this is a negative because it means that everybody's sort of in, and if a negative thing comes along, which we don't know what it could be some type of financial crisis, you don't know, but this does somewhat set us up for a correction or a pullback in the market. Be aware that we are in a very optimistic world right now when it comes to the stock market. The problem with the indicator is we can stay in these levels for an extended period of time and the market can continue to climb higher. Now, the volatility index continues to look positive. We're below 30, looking fine. Volatility, when you bring volatility down, it makes the market more attractive, therefore, brings in more investors. Now, here's something that I wanted to introduce. This is the Hayes High-Low Weekly, which is where we're basically measuring the number of new highs versus the number of new lows. So we get net new lows. Now, what's interesting about this particular indicator is the only time that we got down to extreme readings like this was during the financial crisis of 2009. So I think the question is, how many times since 1990 have we gotten down to this level and then immediately rallied to this level? Well, there's been only one other time, and that was 2009. Well, we have recently seen this. We've seen where, because of the coronavirus scare, we got down to extreme readings. Now we've bounced up and reversed back up again. Now, what it's basically saying is that there's a lot of stocks making new highs in this market, which is very positive, and that's also what's causing the sentiment readings to read so greedy, is because the market's doing so well. This is a positive sign, though. Now, the other thing that I'm noticing here is that the mid-cap stocks as well as the small cap stocks are really starting to rally here and break out to new highs. This is basically a catch-up trade. These stocks have been underperforming the market for an extended period of time. It means the market's broadening out. Very positive. Now, I wanted to mention a little bit about energy here. This is interesting here. I mentioned a while back that we were going to watch for the United States Oil Fund to confirm the XLE. Now, what we have here is the 200-day moving average. Problem here is the 200-day is in a downtrend, but we have broken above it. So we're starting to see some life coming into the oil stocks. Now, this is the oil producers. You can see here, well, these are the not the producers. These are the overall energy industry. You can see here broke above the 200-day. However, 200-day is in the downtrend. Here we have the XOP, which is the producers. You can also see S&P, the 200-day is in a downtrend, however, broken above. So oil may be trying to put in a bottom here. However, I think it's important to remember the 10-20 moving averages, 10-month versus 20-month moving averages, is a great way to evaluate long-term trends. So you can see here back in 2014, 2015, we got a death cross on this particular indicator on the West Texas Intermediate crude price. You can see here oil in a downtrend, trying to rally back in a downtrend. So I'm just simply saying that looking at this long-term trend indicator, oil really doesn't look that positive, but I do think you're getting somewhat of a dead cat bounce in the group. Now, what's interesting here is that I went back and found an ETF that specializes in lithium, which is the main component used in lithium-ion batteries, because what we said in the very beginning here was that Great Britain is opening all these charging stations which charge lithium batteries. It looks like lithium is the future of energy. You can see here Golden Cross, somewhat sold off here a little bit, but back on a Golden Cross. Whereas if you look at the oil picture, it's not a Golden Cross, it's a death cross. Does not look positive. So lithium could be the big deal. We'll have to see. Now, here are the top five. Now, this is just interesting to note here. This is In-Phase Energy breaking out to a new high. Very positive trend here. they're involved in inverters for solar panels. So if you have solar panels, you have to have an inverter to be able to use the electricity that comes off the solar panel. I think this is going to be an interesting stock to follow. Here we have Freeport-McMoRan, which is copper. Again, when you get copper doing well, it means the economy's doing well worldwide. So the fact that copper's in an uptrend is a positive sign. This is GrowGeneration. We've talked about this stock before. They're in the marijuana business. You can see here stock did break down somewhat of a volatile stock. Of course, these are risky situations, but you can see here how it broke out, and you've got somewhat of a buy signal on GrowGeneration. Stitch Fix, new name. This company is involved in clothing, where you order the clothing over the internet and they send it to you on a regular basis. My daughter claims that this is a very positive thing for a lot of female people that buy clothing. It's in a way, it's kind of like you're renting the clothing, but it's hard to explain for me. But it's just in the apparel industry, broke out on an earnings announcement in a very powerful uptrend. This is SunPower. Now here we have another solar stock. This is the company that manufactures solar panels. Okay, you can see a breakout here just like Enphase and somewhat of a little bit of a consolidation there. But again, I'm just simply saying pay attention to lithium and pay attention to solar and battery technology. A lot is going on there. So that's basically it. If you have any questions, please let me know. Thank you very much.